All right, everybody. Hello and welcome again to another chapter, if you want to put it that way, our video podcast with Andy Gagliano from Gagliano Mortgage. Andy, how well are you doing today?
I'm very well. How are you, Tony?
I'm doing great. Thank you for asking. Trying to enjoy this crazy weather. I don't know how to describe it. I've been in Alabama for, it's going to be 14 years now, and I still can get used to it. Really, it's cold in the morning, warm in the afternoon, like hot, and then a little bit chill in the evening and nice. And then at night, we get a little bit of cold again. So, what's going on, man, with this weather?
There's just no way to figure it out. You just have to roll with it, you know? And the thing is, I'm not going to say there's global warming going on, but there's definitely some sort of a change going on over a longer scale with the weather. Because this is vastly
Alabama
different
for you. This is Alabama for you, man.
Yeah, it's vastly different weather or I should say, compared to when I was a kid. I don't remember as a kid getting these severe storms like, what was it, Friday? Was it Friday? I don't even remember what day it was. But one day last week, we had some storms pop up in the afternoon, and it didn't rain long.
Yeah.
My wife and I were gone from the house, but it was trash day, so our trash cans were out on the street. Well, let me say it this way. Our trash cans were out on the street in the morning when we put our trash out for the truck to come by and pick up. In the afternoon, when we got back from wherever it was we had gone, the trash cans were 3 houses down the road.
Wow.
The rain washed, they were sitting in the gutter, and of course the trash truck came and emptied them out. So they're empty now. But these things, when they're empty, they weigh 40 pounds or so. I mean, they're not light.
No.
And the rain washed them down the gutter 3 houses down.
Wow. And we got the wind also, remember that?
Yeah. Yeah. And they were just out in the street.
And everything happened just in a matter of minutes. I mean, it wasn't even an hour, 2 hours, 3 hours. It probably was like 10, 15 minutes top.
Yeah.
You know, it's like at the wind and all that severe weather. It's like, oh, look at the street. Let me hit the street. Clean it and then move away.
Yeah. Yeah. Exactly. So it's pretty wild.
Andy, let's talk about something very interesting. And we always talk about a lot of things, but I would like to talk about something. We got somebody pre-approved. All right.
Mm-hmm.
You pre-approve somebody. We're ready for rock and roll. I find a house. They love it. They like it. They're ready to make an offer. We make the offer. You know, I write one of those offers that they cannot refuse. And now we are under contract. So we get the listing agent and myself get together and decide who's going to be the title and the closing attorney. Then we send the contract to them and we copy you on that. And I send you the contract as well.
Yeah.
You know, the executed contract. That's how we want to call it. From that point, what is the next step for you? Our next step is we have an inspection, because if you are working with me and if you tell me that you don't want to do an inspection, I'm going to fire you. Not really, but I will do everything and anything I can to convince you that you have to do an inspection in the house. That is non-negotiable.
Yeah.
As a realtor, that is something that we have to do, because, and I don't care if it's a brand new home, new construction, we're still going to do an inspection. Trust me, we get surprises sometimes, and I've seen it.
Yeah. Oh, yeah.
So we get the inspection. From the time that the offer is accepted to the time we schedule the inspection, And let's say this, in this particular case, just the inspection goes well and there's no major repairs and everybody's happy. So in
Yeah.
between that time, what the mortgage guy does, what do you do?
Yeah. So one of the first things we're going to do after we find out that home inspection is fine, the buyers are moving forward, the sellers are moving forward with the transaction, we're going to order an appraisal. That is a very, very important step in the process. And it's also something that does not happen overnight. So we're going to order that very soon after we hear that the inspection went well, because that may take a week, it may take 7 calendar days for that appraisal report to come back. It could take 10 days if the seller cannot get the appraiser in the house very quick. So it's important that we get that appraisal ordered and that we get that process moving. Now, while the appraisal is in process, while we're waiting on the appraiser to schedule the appointment, to inspect the property, to find the comparables, to take pictures, to put their report together, to have that report go through quality control, and then finally it gets sent to us. While all that's going on, we are getting updated pay stubs, updated bank statements, a driver's license if we don't already have that, and W-2s, tax returns if we need them, if it's a self-employed borrower and we haven't gotten those already. If it's a self-employed borrower, we've gotten those tax returns before we ever issue a pre-approval letter.
Yeah.
But sometimes, we'll find out during the loan process, hey, this borrower didn't tell us that they get commission, but they have commission, and we need that commission income to qualify for the mortgage. So now we need tax returns. Or maybe they have a rental property, and that is why we need tax returns. So we're doing our due diligence. We're doing our research, our digging of dirt, so to speak, on the buyers, to just really verify that all the information that they've given us verbally matches what the real world is. I'm going to throw a couple of things out there that we see a lot, from what a buyer tells us on a loan application to what the real world tells us. I'm amazed. I get it. I understand it, but I'm amazed at the number of people who don't know what they really make, what their income really is. So what do I mean by that? Well, we have borrowers or buyers tell us all the time, I make this much money every 2 weeks. So we say, okay, we work with that number. We get them pre-approved based on that number. We ask them to send us a pay stub so we can verify that pre-approval is good. They send us a pay stub, and they don't make that much per week. They make that much, or per 2 week period. They make that much plus some. And the plus sum is the amount of taxes that they have cut out of their paycheck, because if they make $100,000 a year in a salary, they don't bring home $100,000 a year. Uncle Sam gets his cut. The state of Alabama gets its cut out of what is that paycheck is for every 2 weeks. So we actually work off of the gross income figures, not the net income or after tax income. We're working off of before tax income figures. So, hey, that's a great thing. If the buyer or borrower really has more income than what they told us, that's generally very good for us. So we're moving along in a good direction.
And it has to be, they can prove that income.
Right.
Like some people work cash and they don't report that cash.
Correct.
And then when they want to buy a house, they want to use that income to qualify. But if it's not reported, if it's not on the bank, it cannot be used.
Yeah. Yeah. Very true. Very true. So we're verifying all the information that's on the application during that period of time. Now, a lot of times, and this can sometimes frustrate a buyer, they'll send us a piece of documentation that we ask for, like, hey, send us your bank statement for the past 30 days. They send us a bank statement, and we look at the bank statement, and that generates additional questions. For example, you paid XYZ $420 this month or last month, and XYZ is not reported on your credit report. But we know that XYZ is a creditor. They loan money to people. So prove to us why you paid XYZ this money so that we can verify that that is not an undisclosed debt on your credit report. So we look for things like that. We look for things like large deposits. What is a large deposit? Typically, a large deposit is something that's greater than 50% of your gross monthly earnings. So we look for those things. When we see those, we have to ask for additional documentation. And that's sometimes where the buyers get a little frustrated. They're saying, okay, why didn't you ask me for this from the start? Well, we didn't ask for it from the start because we didn't know about it. And so those are things that will come up while we're processing the loan that oftentimes can require that we get additional documentation from the buyer. So once all of that documentation, once we've gathered all that, we've dotted all the I's, crossed all the T's, the appraisal has come back in, the appraisal looks good, then we package that, all of that documentation up, send it to the underwriter to be reviewed. The underwriter reviews it, and 98 times out of 100, the underwriter is going to justify that paycheck that the underwriter is getting. And for any underwriters who may watch this, I'm just kidding. We know that you really are finding legitimate things in the file that need to be explained, but they're going to find something in that file that's a document that's maybe missing, a question, something. Maybe there was a transaction on that bank statement that I missed when I reviewed it, because I am human. I'm going to miss things. And so maybe there's a large deposit that was missed, and the underwriter is going to say, hey, explain and document this large deposit. So
even with the expense, I'm sorry, I'm going to interrupt you here. With the expenses, there is a recurring payment every month of, let's say, $600 that is not on your credit report. We know here in Alabama it's pretty much very common in a lot of cases, and I've seen it more often than not, pay here, buy here when you buy a car.
Mm-hmm.
And when you do pay here, buy here, pay here, 10 out of 10, as far as I know, they don't report that to the credit bureau.
Right.
So you have a payment every month that shows on your bank statement, but doesn't make sense when they review your credit report. So those are the little details that need to be explained, right?
Yeah. Things like that, things like child support, alimony. A lot of times those things are set up to be drafted out of someone's account every month automatically, and they just don't think of it as a debt. And I can totally understand how they overlook that, because they're not physically writing a check every single month to the ex-spouse for child support or alimony. And so
that's good that you mentioned it, because like in my case, I pay child support for my son, and I don't see it as a debt. I see it as my responsibility.
Right.
And what you just mentioned is true. I really don't see that as a debt. I don't have that debt. That's my responsibility. It's my job. It's my son. I need to take care of my boy.
Right. Yeah. And to me, what's a little bit crazy about all that is, if he was under your custody 24/7, 365, there would be no debt. but you would spend way more each month than what you're paying in child support
I
on
do,
that child.
believe me. When he's with me, anytime he comes spend 3-4 months with me on his vacation time, I spend more money those 3 months on him than what I paid the whole year in child support.
Oh yeah.
And I
Oh
love
yeah.
it. I'm not complaining.
I know you're not. I know you're not. Yeah. You guys have a great relationship, and it's awesome to do that and support your child that way and do the right thing. But it's just one of the many things in the mortgage industry that I understand why we have to count that as a debt,
Mhm.
but I understand what the real world is. And the
Yeah.
real world is those kids are going to cost us a lot more than what the judge or what the judge tells us to pay or what we agree to in a divorce decree. So, but those are the type things that an underwriter is looking for on those bank statements, undisclosed debts that we have to count as a debt on against someone's qualifications. So when we get that conditional loan approval back from underwriting, and that's what we call that when the underwriter reviews those documents, the first set of documents, and comes back and asks for additional documentation, we call that a conditional loan approval. So then maybe I do, maybe I don't have to ask the buyer for additional documentation. Maybe it's just things I need to do on my end. Maybe I left a disclosure out that I need to sign. And so I have to sign that disclosure and get that to the underwriter to make sure that we're in compliance. But we get that set of conditions back to underwriting. And once that goes through and is reviewed by the underwriter, what we hope to get is not another one or two items that the underwriter wants to see, but we hope to get what's called a clear to close or a CTC, clear to close. That's what we hope to
My
get from
favorite
underwriting.
3 words.
I'm telling you, mine too. I do a dance every time they come in. It's, if you had a hidden camera in my office, you would get a good laugh out of that. But it's what we're all pushing for, is what we're all waiting for and working towards. So when we get that, then it's a matter of coordinating all of the things that need to be coordinated for closing. We've got to make sure that if the contract calls for a pest inspection, a termite bond, we got to make sure that that's in and that we've got the invoice for it. If there's a survey called for in the contract, we've got to make sure that that has been done and that we have an invoice for it. So all of these inspections that have been done during the contract period, we've got to make sure that the people who did work for those services are going to be paid. And we coordinate that with the closing attorney or the title company, whoever's going to close the transaction for us. And then we draw our closing documents and send those over to that title company or closing attorney to get ready for closing day. Now, I'm going to throw one more thing out there because I just have to stress it. I cannot stress this enough. Just because we're through the underwriting process, just because your closing package is sitting at the closing attorney's office or the title company's office, if you have not signed those documents and the seller has not signed those documents yet, your loan is not over. Please, 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 please. And oftentimes I think I can sound pretty preachy when I'm doing videos like this. This time I am being preachy. There's no thinking. I am being preachy. Do not apply for any credit. Do not open any new credit. Do not go buy anything with cash. I can tell you, well, let me tell you why. As a buyer, we're going to pull your credit one more time before closing, because we have to make sure that you did not go and buy a new Rolls Royce on 60 easy payments. We've got to make sure that your financial picture is the same today as it was when we started this process. Now, your financial picture can be better.
Yeah.
If you just naturally paid off a debt that was due to be paid off, then that betters your financial picture. If you were at month number 59 on a 60-month car payment, and you made payment number 60 while we were working on your loan, and that loan has a zero balance, that's perfectly fine. Not a problem at all. Your
What about
financial
credit
picture
card?
improved.
What about
Credit cards?
There's something that happened to me once, and I'm going to tell you. We were right in the middle of the process. This guy got this credit card, and he used it to pay gas. He went on vacation to Florida, drove all the way, and came back and used it to pay gas, just to pay gas. That was the only expense that he had, and he ended up paying like $300 purchasing in gas that he was planning to pay when he received his statement. That messed everything up.
Yeah. Yeah. It's little things like that maybe they don't kill the deal altogether, but maybe it slows the process down so that we cannot close on time.
Correct.
Maybe we can't close on Wednesday like we're scheduled to, and it has to be pushed to Thursday. Think about it as a buyer. You've got movers lined up for Wednesday afternoon. You've got utilities being moved over. You've got family lined up to come and help you, friends lined up to come and help you. You've got painters coming in, maybe someone coming in to clean the house before you move your furniture in it. Now you've got to reschedule all of that stuff by one day. It's a lot of phone calls. It's a lot of headaches. And that's all stuff that could have been avoided by just waiting to open any new credit accounts until you've signed and until the seller has signed, because that transaction is not done until the seller signed also.
And if you're not told, you as a buyer, you're not told to pay off an account, regardless, a vehicle, a credit card. If your lender has not told you pay this off, don't pay it off either, because
Right.
underwriter is going to ask, where do you get that money to pay it off?
Yeah. Yeah. You're exactly right. And I'll say one other thing. I had this happen. I had not been in the mortgage business very long when this happened to me. And my client was actually the daughter of one of the real estate agents that I worked with at that time. And she's no longer in real estate, but her daughter, the day before closing, went to the appliance store and bought a brand new refrigerator, and she did not do what I asked her to not do. She didn't put it on credit. She paid cash. So when I called her the day before closing and I said, for tomorrow's closing, you need $7,825 to close. She said, I don't have that much money. And I'm thinking, you had that much money because we just verified it a few days ago. So I had to ask, well, how much do you have? Well, this morning we went and we spent $1,080 on a brand new refrigerator.
Oh.
So where do you find $1,000 and some odd dollars overnight? You start flipping sofa cushions. You look underneath your floor mat in your car, between the seat and the console in your car, and
all those coins.
Yeah, hope all those quarters mount up to be $1,080 something. But and in that case, her mother gifted her $1,100 or something to make the deal work. But thankfully, her mother was in a position to do that.
Yeah.
And so, again, it just creates more work, more stress for everyone. And just because you have the cash to go pay cash for something, don't do it. Just hold off. And, we're coming up on Memorial Day weekend. This is a big weekend for appliance sales.
Yeah.
I don't know why, but it is.
Yeah.
If you miss a sale, then just miss the sale. Miss the sale, pay $200 more for the refrigerator that you want, but close on the house that you've got under contract that you've already invested $1,000 in inspections and appraisals and all this other stuff. Get the transaction, get your purchase of your new home done, and then worry about your appliances, your new refrigerator that you want to go buy.
That is correct. And that's unfortunately a lot of people do that. And while all that is going on your end, on my end, we are making sure that title work is done. We're making sure that title is clean and clear. We work hand to hand with the title company and the closing attorney. And also we are in continued contact with you to making sure the financial part is going to work and everything. We want this to work. And when we have the clear to close and everything is ready, and we got to do one more thing from our side, and is the final walkthrough. Don't miss that part either. If the house is vacant, it's easy to do it. If the house is not vacant, there's ways to work it out. We still got to go and do a final walkthrough, especially if there's been some repairs that being requested. We got to go and make sure that those repairs have been done before we close it. Things have not been done on our end. If we go to the walkthrough and we see that no repairs have been done or not satisfy the buyer, we can still say, hold on, right? It will take probably a couple more days to close, but we want things to get done. How that will affect the mortgage?
Yeah, so if closing has to be postponed, typically what ends up happening, I should say, where we end up having the most problems is with an interest rate lock. Because, Tony, you know as well as I do, most real estate contracts are written, if today's date is the 15th of May, then that closing date is going to be the 14th or 15th of June. Usually they're written on a 30-day time period is how long a contract will be written for before closing. Now, our interest rate locks typically are 30-day interest rate locks. We can lock for a longer period or a shorter period, but that's generally how long of a time period we'll lock an interest rate in. So if your interest rate lock expires today on the 15th, and that's the day we're supposed to close, but your closing gets pushed back 2 days, closes later on the 17th, now you got to extend your interest rate lock a couple of days, and that can sometimes cost additional money at closing to make that happen. So making these closing dates is extremely important. And, as something we generally try to stress to our clients when we start this process is, look, I'm going to give you a list of the documents that we need from you. Please don't delay in getting us those documents, because even one day, and you know it as well as I do, Tony, probably 90% of the closings that get delayed are delayed by 1 day.
1 day, yeah.
1 day.
Yeah.
And that 1 day could be the when you say, oh, you know what, I meant to get you my W-2s this morning before I left the house, but they're sitting on my kitchen table and I didn't bring them to work so I could scan them and send them to you. I'll get them to you tomorrow. That's 1 day.
Yeah.
1 day. And so the timing is extremely important, extremely important. And, we're never ones to say, I told you so, or this is not our fault, this is your fault, because the truth of the matter is the blame doesn't matter.
No, it doesn't matter at all.
Things
need to get done.
The damage is done. Let's do what we have to do to fix the problem of closing a day late. Let's get to that closing, get it over with, because that end goal is really all that matters for a buyer. And that is, let's get you in that house.
One example was I have a couple of years ago, we have a closing and we have to extend it for another 4 days. And it was that the buyer forgot to provide certain information and the rate was locked and everything. So those 4 days cost the buyer an extra $375 to extend the lock on the interest rate. So, that can be a change in a lot of things. And the money that you need to bring to the table, to closing and everything, it can change a lot of things. I love it when, and even can happen when we're sitting at the closing table.
Oh, yes.
I've seen it happen. It happened to me a couple of times that because something that somebody didn't see it, and then all of a sudden, boom, we cannot close.
Yeah. There's so many moving parts to getting a transaction closed. And there's so many people involved in getting a transaction closed that all it takes is one person being out one day sick, one person overlooking something. Because again, I mentioned it a few minutes ago. I'm human. I'm going to miss things. Everyone involved in these transactions, we're all human beings. We're all reviewing documents with these things right here. And sometimes we miss things.
Yeah. Even, like in my case, I wear glasses and I got another pair of glasses. So
you got to keep those backups, don't you?
Yeah.
Yeah.
But that is important. So, it's good that we need to talk about it. And I know you do talk about it with your clients. I reinforce that with my clients as well when we start the process and everything. It's very important to be informed and not let things. There is a saying that I like to use in certain times that is like when we get to the breach, we figure it out how we're going to cross it. Not on the mortgage, not on the real estate side. We need to be prepared before we get to the breach.
That's right.
And if we can avoid getting to that breach, much better.
Yes, no doubt.
Andy.
The last thing I want to say is this, Tony, and I'm not downplaying this at all because I do feel like I've been preachy up to this point in the video, but I wanted to be. I wanted to be because this is extremely important. A lot of people, including our buyers, have a lot riding on these transactions. And so you and I take these transactions very seriously.
Yes.
But let's say we do miss that closing by day. For the vast majority of the transactions, it's not going to be the end of the world. It's going to be an inconvenience for a lot of people. But there are things that can be done, that can be worked out, and the deal still kept together and still closed. So yes, it's an uncomfortable position for a lot of people because there's a lot of people involved, and it's not anything that any of us want to happen. But when all of the dust settles, we all still got our health and we're all still alive to live another day. And that's ultimately what matters, because it can be handled tomorrow. It's just creating more work and more stress for everyone to make it happen tomorrow when it was supposed to happen today.
That is correct. And it's just a delay. It's going to happen one way or another. And I think when we get to that point, we already know that it's going to happen. We just need to overcome that little hiccup.
Right.
Either on the real estate side or on the mortgage side.
Yeah.
It's just nothing that can, when we get to the point that we have a clear to close and then all of a sudden we got a hiccup and something, we can fix it. We can work it out. Most definitely.
Yeah. Yeah.
All right, Andy. I love it. This is one of the topics I love to talk, and I love to talk about it every day if I could, to let people know that, educate people, to let them know what the process is,
Yeah.
be full transparent with everybody, and let them know that although it doesn't look like we don't do anything like some people say, we actually do more than what you guys think behind the scenes,
Yeah.
coordinating and communicating. So one of the things that I can tell you is that communication is key in this business, and communication that I have with Andy is fantastic. There is no bad news. The only bad is you delay the news.
That's right.
Don't take 3-4 days to deliver news, whatever it is. We need to take action. This is something that we need to take action. And Andy and I promise you, we're pretty good at taking action. So, Andy, if people wants to get qualified and talk them up, getting into a home, getting a mortgage to buy a property, how they can contact you, my friend?
Yeah. So I can be reached at 205-979-4412. I'm at extension 1. How about you, Tony?
Perfect. So when Andy called me and say, Tony, this buyer is ready to rock and roll, then we're going to rock and roll. I promise you that. So you can contact me at 205-370-3248. So, Andy, it's been a pleasure seeing you again. So I really appreciate your
Same.
time and all the information that you provide to us. And people, if you find this information that is important and educational and you like it, just, give us a like, hit that subscribe button over there. We're really going to appreciate, and contact us. Even if you have questions, we're going to be more than happy to help you guys. So, Andy, thanks again, and I hope to see you next week.
Sounds great. Thank you, Tony. Have a great week.
You too. Take
All
care.
right. Bye.